capping off a huge week for tech earnings. Amazon reporting just moments ago, Meta and Apple announcing earnings later today. Our next guest thinks this has the potential to move markets significantly after the Fed's comments yesterday led to that late afternoon sell-off. For more on the big week from big tech, we're talking to Rockland Trust Executive Vice President and Chief Investment Officer Dave Smith. Dave, it's good to have you. We just got Amazon out. Initially here, investors like what they see. You see the stock jumping about 5% in the after hours. So we've had a few big tech prints now, Dave. You know, we've got Amazon, of course, also in Microsoft and Alphabet. We got Apple and Meta on deck. So far, Dave, as you've been kind of working through these earnings reports, reading them, listening to on the calls, what do you make of what you heard so far from big tech?
Yeah, so far so good. I think obviously the reaction yesterday to the Fed was part of the equation, but also we had slightly mildly disappointing results from Google on Tuesday afternoon, which I think impacted the markets yesterday. And then obviously the New York NYCB, the community bank in New York City, taking a large charge with two drivers in addition to the Fed yesterday. Today, a bit of a recovery. Really good to see the Amazon results after the close here. Most importantly, the beat on AWS, which is really the profit driver for the company. So coming in at 13% revenue growth is better than expected. Still below its competitors. I think both Microsoft and Google have a little bit more growth in their web services business. But at the end of the day, everybody's kind of meeting or beating expectations in that critical line item. So far, so good. One down, two more to go today, and we'll see how we finish the day in the evening and see what that means for tomorrow.
Well, listen, not to give my producers who are still scrambling to do graphics a heart attack, but Meta's in the plus column as well here, Dave. I'm going to say out of the gate here as well, the company's revenue forecast beating. It's going to pay a dividend of 50 cents a share. We're going to dig more into those numbers in a moment. But how badly does the market need these beats right now after those couple of disappointments?
Well, I think it's critical. I mean, we all know that what if you want to call them the Magnificent Seven, if you take a couple out and call them what you want, but these big technology-oriented companies make up a substantial portion of the S&P 500. So their performance in any given day, if it's significant, it's going to move the benchmarks. It just is what it is. You can still add value, outperform by buying around those names. But at the end of the day, when people think about how the markets are doing, these companies are driving the results of the benchmarks. It's just the fact of the situation that we have at the moment. So it's good to see. And ultimately, these have secular growth trajectories that we think are part of the equation. But there's also some cyclicality to them because they've gotten so big that they can't help but be impacted to some extent by what's going on in the broader economy. So positive trends are really good.
And Dave, though, when you look at, we have both Amazon and Meta surging right now in the after hours after these prints. Plenty of investors might be, viewers might be watching this, Dave, right now and think, you know what, big tech worked in 2023. They see results like this. They think, you know what, I'm just going to stick with big tech in 2024. Is that what you would advise, or no, you got to pick your spots more carefully here?
I think you have to be careful. The stocks have all kind of rallied together through 2023, and I think the business models are so dramatically different. I mean, if you think about Tesla, for example, and what drives its fundamentals and compare it to a company like Google, it's very, very different. Now, interest rates obviously have an impact on valuations, particularly of high growth companies. So there's an impact to them and from a price point on what's going on with interest rates. But the fundamentals that drive the top and bottom line of these companies are dramatically different. So I would expect to see some dispersion. We've already sort of seen it to start 2024, where Tesla sort of disappointed and its stock has not been performing in conjunction with the rest of the group. And I think there may be more of that as we progress through this year. I hope that's the case, because ultimately you would expect investors to be able to discern the differences in these various business models.